Welcome to the Hurley Investments market commentary of July 7th, 2025. With you this evening is Keeve Bybee. Another typical summer evening where Kev and I tend to share off responsibilities so that we can go off and get things done and have a little break here and there. But it's good to be with you this evening. I wanted to do maybe a little bit of a shorter one to just go over some key points of our trading process and investing process. We have the big picture linked here, but this goes back to June 23rd. So it's really just the link to that information that we've already spoken on. We are currently getting into earnings season with the financials coming. Actually was supposed to be, here we are, 16th for Bank of America, and where was JP Morgan? Here it is. So 15th JP Morgan, 16th Bank of America. So those are next week. Kevin wrote these in wrong. Make sure to make fun of him and let him know next time you talk to him. But nevertheless, we have protected for earnings JP Morgan and Bank of America, which means as we scroll down, these earnings are all going to be the same for next week because this is next week's earnings, not this week. This week, Delta Airlines, Levi, WD-40. Not too much to speak of this week, and really things start to get going with the financials starting next week. So, little bit of a correction there, but all good. So what I want to talk about, guys, couple questions from specifically more new folks. We've had this incredible run last May and June, last 2 months. Let's bring up our market. Just last week are passing all-time highs. Touching all-time highs, or making a new all-time high rather, on the last trading day before the holiday on July 3rd. Pretty incredible. Had a bit of a pullback today from that spot. You'll notice little pullbacks happen every time there's a few days where we go up, hit new all-time highs, it'll pull back a little bit. It's just regular sort of movement. I would say that's pretty regular movement, trading day movement in the overall market, which is something that tells me that the market is not overly concerned with the current news of the tariffs coming back into play. Really, it's just Trump trying to get those last few negotiations wrapped up. And and really just trying to push those few countries to come to the table and get things done. And right now the market seems to be not only believing that those things will get done, but that Trump, because of recent history back in April, I think the market just kind of believes that he is watching the goings on of the market and is sensitive to it, and wants to keep the economy going, and wants to respond positively to market movements. However, I would say that it would be a mistake to overly correct and believe things are just going to get handled quickly. The new dates are pushed back to August 1st for these last countries. He named 15, including Japan, a bunch of other little countries. And yeah, summing that up, I would say market is not overly worried that things are going to get done, but I also think there's going to be big Trump-like statements to get things pushed through quickly, and a lot of huffing and puffing and acting big and tough to scare some of these countries into making things happen, and that might make the markets worry for a little bit, which is why some protection is going back on a few stocks, but we are at that time where it sort of makes sense as well to start getting things protected for earnings. Bank of America and JP Morgan, as I mentioned earlier, has protection for earnings. We have also Apple, which also has earnings this month, but not until later. But I wanted to talk briefly about Apple and Google. So let me go back and forth. If you guys could take a look at this chart, what just off these last few months and watching how the price of Apple stock has moved around, what would you say? What I'm looking for is, where do you think Apple seems to be struggling? Not talking about their computers, I'm not talking about their company, I'm really just talking about the price movement. Stuart says 200. All right, let's draw a line here. This is 200. You think Apple is struggling with what at 200? Stuart. Stuart says no innovation. But Stuart, I'm not asking about the business. We're just looking at a chart right now. So I don't see anything at 200. We have the stock moving down below 200 and back above 200 rather easily. So I'm not seeing anything significant with regard to the price of the stock at 200. I'm seeing maybe support level here at 195. Let me erase this and let's look at it again. Let me ask a different question. What price does it look like Apple is struggling to get over? When the rest of the market has kind of rallied back and went to all-time highs, Apple's gone sideways. Stuart, I think you're right that their business needs more innovation. They need to be smarter. But again, let's just focus on one thing at a time. And right now we're focusing on this price, the price chart. All right, 215, I like it. Thank you, Stuart. Now we're on the same page. Right around this 215, gets close here. Anytime it gets relatively close, touches it here, got up and over it today and just fell like a rock. Back down to 209.95-ish. So earlier in the morning, things looked in general across all of our stocks and the stock market, they looked a little worse off. If I can get this thing to work for me again. There we go. Let's go back to the market. SPX. You can tell it went down further in the morning and then paired back up. That wasn't quite the same with Apple. It went up in the morning and then fell back below the opening price. So it would be this price, 212-ish is where it opened. You can see that big O there. Closed around 209. All right. So what all this to say what? I'm trying to say, as we look across the news in the mornings, when there was weeks ago, we talked about Israel bombing Iran and the futures looked awful. We could have, as soon as the market opened, just thrown protection on everything. And I told you I was hesitant to do that because it looked like more of the same. More battling, Israel going after anyone they felt threatened by. Then we had the US go and bomb uh, Iran and take out all of their nuclear facilities. And once again, we had futures go a little crazy and things fall and fear kick up. And I thought, well, but wait a minute. We just took out any potential worry of a nuclear war or nuclear escalation, taking out those facilities. And it looked like the market sort of caught on to that idea as well. And though it opened lower, it started to come back up. So, moral of the story is we're never looking to just throw protection on because we're afraid or that some big thing has happened. And we're certainly not afraid to throw protection on when it makes a whole lot of sense. It made a whole lot of sense when the whole country and the whole world's economy was getting shut down during COVID. Everything got protected. Not everything is that sort of thing. So, the process goes to weighing the news, looking at individual stocks, and watching to see how things move. And it's very hard to watch to see how things react and move if the first thing you do in the morning when the market opens is throw protection on, and then the market goes back up and we lose money paying too much for protection. So this morning, as I looked at things and I watched things through the morning and into the late morning of around 9:30-ish my time, Mountain Time, what I noticed was lots of things were still holding up. Most things were negative, most stocks, but things were being held up. Apple and Google seem to be struggling still as other stocks and the stock market in general pared back its losses. So what did I do? I pull up these charts. Oh, one. You can really say 2, 3, now 4. And even if we're counting today, especially 5 times where we got relatively close to 215, if not touching it here and passing it here today, this morning. And add in the fact that we've got earnings coming up and just overall market worry about these tariffs. If I'm going to look to protect something this morning, it was Apple made a whole lot of sense. But it wasn't just the news. It wasn't just fear. There's 5 reasons here, technically. It's telling me this one might be a good one to protect, especially for earnings coming up, as well as those other reasons that I just mentioned. So Google, Alphabet, let's look at this one. Not quite as straightforward, but a similar idea, this time at 180. Once, twice, went down for a week, came back up, once again 180. So clearly it looks like to me there's something going on price-wise at 180. That is causing problems for Google. So Google was the other one. It's not, it's certainly not as a company looking quite as crappy right now as Apple's situation. There's certainly more positives to look at for Google, aside from the antitrust issues that they seem to keep coming up on. But again, 2 reasons, maybe you could call it 3, that told me it really isn't a big deal if we get this one protected. If I'm wrong, we can always take that protection back off. These trade deals come in and get fixed quicker than we expect. If Google comes out with some news, whatever it is, it doesn't really matter. We can adjust. But right now, today, this was something I felt made a lot of sense, along with Apple, to get protection on and get ready for earnings, maybe a little earlier than some of the others that might look like they're holding up better or still on a pre-earnings run. Questions so far on a little bit of technical analysis? I don't know why it's being weird. All right. So let me just write a few notes. Daily process. Have awareness of after hours stock market movement. Have awareness of news events. Stay calm and carry on. Watch the first hour of market movement. I'm going to have a sub bullet point here. E-mini futures get cleared out and opening volatility settles down. Then the question is, what stocks are moving with the market and what stocks are doing worse. Check. And it caps this one. Individual stock news to see if there's stock specific news moving the stock. Check. Charts. And notice support and resistance and technical trends. Is the stock struggling because of a price resistance level? Is a stock staying above a support level or breaking through it? That is, all in all, the simple process that I use, that Kevin uses. What I'm not throwing in there is Kevin and I texting back and forth or calling each other and arguing about what we're seeing, so that we're not just getting stuck in our own heads, that we're keeping each other honest, that we are keeping each other level-headed. So there's also that process going on. Thoughts or questions on these? Abraham, I see your perplexity links, but I can't click on them or anything. Fundamental analysis, I'll check those out. I think my fundamental analysis was pretty good. Those are the reasons I made those choices. Right on. Abraham, those are the reasons I made those choices. Some, again, I'm coming back to the topic that I threw out there a minute ago. We've had new clients come in and ask, how are we doing so darn well in just a few months? So I love to hear those things. So don't get me wrong. In fact, it is wonderful to hear those things. But those of you who have been around a little longer knew that the process of which that we're reaping lots of lovely rewards right now took a lot more time than a couple months. This year we are destroying the market in comparison. We're doing great. This process I'll say the process is a longer process. It's worth repeating again. The process we are currently reaping the benefits from is a longer process. We've had multiple stocks have awesome runs into earnings as well as the bounce back from tariff fears. What you might not have saw we're doing so well also because we were able to add more shares on the tariff fear market drop. And we were able to add more shares when the market dropped last summer and fall. And we were able to add more shares when the market dropped as inflation wouldn't let up and when interest rates shot up before that, and so on and so on. So that goes back even a couple years. We go before that, we had COVID. I mentioned a little while ago. That was amazing. We added 40, 60, 70% more shares to different stocks and made a really ugly period of time pay us back twofold. We don't, let me say this. We don't have a crystal ball. How do you spell crystal? Oh my gosh. Apparently I don't have handwriting either. Spelling skills. There we go. We look at undervalued stocks, we buy undervalued stocks, we add shares by using protective puts when those stocks fall. Then we wait over time for the market to see those undervalued stocks and wait over time for those the market to see those undervalued stocks. I say to give some love to those undervalued stocks, and we reap the benefit. If this is starting to sound a little familiar, maybe it's because you read Kevin's little market update email. But I just wanted to reiterate the timing of things. We just never know when those stocks are going to pop. Nobody knows. There's not an average of past price movement that is going to tell you anything about where or when the stock is going to move up. But every time we add shares, theoretically, we lower our time as well that we need to be profitable, because we've lowered our cost basis. The more we can lower our cost basis, the easier it will be for us to be profitable when those stocks go back up. And we have done exceptionally well lowering our cost basis on some really good undervalued stocks, added more shares, and That's why things look so wonderful right now. But it's not always pretty, and it's not always quick, and sometimes it's frustrating. But man, can you imagine just being invested in some fund, in some market indexing fund, and just going up and down and up and down, and having your advisor tell you, don't worry, the market always goes up over a long period of time, and you're sitting there not knowing if that period of time is going to be up when you need it, and you're living off of it. This process works much better. We like those downturns. They give us more shares, and they give us more profit. I will take this process of trading and investing over sitting and waiting any day. All right. Any questions or thoughts before I move on? I think there's a good chance markets are going to end a little lower with a little bit more uptick in worry once again in the tariffs. And because we've just gone up so darn much. But also we have earnings as well that as they start to come through will dictate a lot of the movement for the rest of July. Dow is technically bullish and slightly overbought. You can see up here above that 70 line is overbought. But you'll also see the same thing with the S&P, and although it's coming off of overbought, and the same thing with the NASDAQ. I can maybe try to zoom in a little bit. Overbought, pairing back. If you look at a chart, it really is much different than just looking at percentages on a ticker on your phone. Sometimes those percentages can look a little crazy and scary. And then you look at the chart and you're like, oh, this is just regular market movement. Really wasn't a big overreaction. I do think that there's a good chance the end of the month of July could be down. That the market maybe needs a cooling off period for earnings to catch up and justify the run up, and for guidance to do the same to justify this run up. And typically we get that run up, and then the summer just kind of swings back and forth. This summer has been a little more exciting and has looked awesome. Again, ignore these earnings for this week. Those will be next week's earnings. Just checking our economic reports this week. Consumer credit. Tomorrow. Crude inventories. FOMC minutes. Wholesale inventories. Okay, so this is this week. We did get that correct. Treasury budget. That's kind of funny. I'm going to blame Kevin. He prepared this document for me. I'm not taking fall for this, Kevin. This is your fault. Earnings next week, economic reports this week. And then just a couple of articles. This is what happened with the tariffs. You can see that. I mean, you can go to CNBC and check those out. It's just the main article there. I thought this one was interesting. Talks a little bit more about the specifically declining dollar. An interesting one to go through and think about. Those will get posted. Are there any other last questions? Questions with our process, questions with the stock? All right, guys. That does it for me then. It was good to be with you this evening. Please take care. Please be safe. And we will talk to you next time. Have a good evening.